going on, everyone? Welcome to the channel, the DIY Investing Guide. Today I'm going to be doing my episode 3 of my Freetrade Portfolio Update. This is the second attempt I've had to do this video, because the first time I did the video, finished the video, went back to check it over, and I silenced the sound on it, the media sound on it, so you couldn't hear a word I was saying. So yeah, second attempt here, so hopefully it won't be too long, this video, as I pretty much know what I'm going to go through in this portfolio update. Can I just ask you all to smash the like button to help the YouTube algorithm? If you're new to the channel, just subscribe to the channel. I'll be trying to do regular updates and various different videos about my life and my journey in the stock market as I'm going through. I've been investing for 3 years, and I've just decided to document my portfolio updates and various things I look into in the stock market. I'm by no means an expert, I'm just learning as I go along. So any companies I talk about which I'm buying or selling, please do your own research. But yeah, I'm just going to quickly go through this update. If you want to also get into investing in the stock market, there's a link in the description to a free share. And yeah, if you just sign up to it through the link, and once you get to that point, if I've had a couple of people that have gone for a free share on here, but they haven't deposited any money in their account. You have to deposit a little bit of money. I think you could just deposit £1 in there, £1 in there, and you can get a free share between £3 and £200. So it's free money at the end of the day. And if you've got £200 share, it's a great great start to your investment journey, really, isn't it? Yeah, I'm just going to be quickly going through. Since my last portfolio update, I've sold a lot of my positions because I think I was spread. I had 5 positions, £1,000, and all great prices, especially with the current high growth stocks, dropping in price. And I just wanted to buy everything. And time to do research on all these. I did research on all the companies, but to do the in-depth research that I wanted to do on them, I haven't got the time. Obviously, working and doing other stuff. So I've gone, the ones that I've mainly focused on are my best ideas, the ones that I'm most bullish on, and the companies that I'm happy about. And really, I'm a value investor, and obviously I'm looking for value growth companies at a great value price that are trading at below their intrinsic value, at a discount on their intrinsic value, basically working out my own personal calculations. And you'll see that I've got an Instagram page where I'll regularly put up stock valuations on how I've worked out the intrinsic value or fair value of a company. And obviously then I discount it by 50% to give me a margin of safety, which is basically a bargain, a stock on sale. So that's how I do it. So this month I've sold, since my last update, I've sold DraftKings, I've sold Skills, I've sold Beyond Meat, and I've also sold Tesla and Moonpig. I've sold these companies. I liked all the companies. I thought they were all great companies with great growth prospects. But I just wanted to, build up decent sized positions in the main companies that I like. So now I've only got, and I've sold Huawei as well, which was in my Chinese portfolio, because I've got a general investment account, because for some reason I can't buy any Chinese stocks on my Freetrade ISA, so I buy my Chinese stocks in my general investment account. So at the moment I've just got three stocks in my portfolio, and I'll go through each one of them in a bit with you as a starting point for this portfolio now. As you can see, I'm up £1.11 in my stocks and shares also since investing. So, considering how the last few months have gone since February, it's not a bad return. I think I've had this portfolio for about 5-6 weeks now, since the new tax season. And obviously you see that in my previous episodes. I still like all these companies, but I'm just going to concentrate on building positions in building a core for my portfolio with quality companies. And I'll just go through what companies are in my ISA at the moment. I'm happy it's in the green, £1.11. But if while I'm building positions in these companies, I don't mind the prices going down, because I'd rather get them at cheaper prices. In the long run, I'm pretty confident that the prices will increase over time. So the first stock of share I hold now is obviously I've sold my positions down, and I've reinvested the money into these 2 companies that are in my portfolio: Tattooed Chef, TTCF, and Facebook FB. So yeah, so first of all I'll go through Tattooed Chef. Obviously you've seen in my previous updates, it was my highest position. It's my biggest position across all my portfolios now. In my main portfolio, I'm about 15% up on it, on quite a large position, about £700 up. And in this portfolio, which we'll be talking about the most, I'm 13% up, which is £80 increase, which is fabulous. And to be fair, people talking about the dips, but if you buy it at a good price, you're going to do well in companies. I mean, it's been pretty solid performer. It's been pretty stable as well compared to other companies that have been on my watch list or in my portfolios the last few weeks. It's held its price and it's sort of kicked on in the last week or so, and it's now at $20.45. My average buying price is just over $17. Overall my portfolio is probably about $17.50 in this portfolio, close to $18, which is still a great upside in the company. Obviously, it's just had a great earnings update. People were looking mainly at the profit, but with this sort of company, you want it to be investing for growth and, in the future rather. And then obviously it can cut back on its R&D spending and media spending once it's grown to the size it wants to. And then I'd rather have it have a 30% profit margin on £1 billion sales or revenue than not spending any on marketing and research and development, and then only having having the 30% on whatever it's currently tapped, 200 million. So the share price will increase. It's investing for future growth and future shareholder value. So obviously with this recent acquisition of the 2 Mexican food plants, existing companies where they can just integrate. Hopefully, if the integration goes well, and it all signs are good so far, and with its earnings update, the growth was great in the company, what you expect it to be. And if they make a few more decent acquisitions, this company, has got a great potential upside, and I think it's cheap relative to what it's good value for the company at the moment. I think the $20 mark was what I was looking at as a decent margin of safety price, and I've got an average price of $17, which I'm more than happy with. Its lows, it was about $16. In the last month, it's been hovering around the 17 in the last month. So yeah, and obviously you can see it's just gone up a bit in the last few days. It's a well documented company on YouTube. There's a lot of YouTubers that do videos on it, so I ain't going to go too much detail, but it's a plant-based alternatives, and it's mainly in the freezer sections at the moment, but he's looking to go into different sectors like ambient and food service and stuff like that. So yeah, we'll just track the progress of this company as time goes on in the next few years. And obviously it's my biggest holding. And then obviously Facebook, everybody knows what Facebook is. It's a beast of a company, and out of all the FANG stocks, it's the one I like the most. Its earnings numbers were phenomenal in its last earnings update. Its revenue increase, its profit increase, its earnings increase. It's still like 90% of its earnings are from ad revenue, and obviously it's looked to go into hardware, but the main bulk of it is ad revenue. So if it fails in revenue or fails in hardware, and the Oculus is coming out, it looks pretty cool. Oculus 2 I think is coming out now, the VR headsets and stuff like that, which it owns. And that's successful, that'd be great, but it's not a massive percentage. So when it misses on sales on stuff like the hardware and stuff, the share price is negatively impacted sometimes, but it doesn't make up. It's insignificant at the moment with its current, as a percentage of its revenue and earnings. Yeah, I think it's a great value, and as you can see out the FANG stocks, it's only trading at, I'm currently £7 up, so nothing to write home about here. Its PE is about 26, and then you look at all the other FANG stocks that are trading between 40 and 60 PE ratio. So there's a lot of things. It has negative press sometimes in the news, and obviously I've used the side of some of them stocks to buy into Facebook and build a core into this. It currently has 2.6 billion active users worldwide, and they think that could be 5 billion. So that's a potentially 50% upside there in in ad revenue and stuff like that. And then if you increase the if the PE ratio does increase in size, it trades at a higher multiple. So the upside on this stock at the moment is pretty high. It's already a 10 bagger. If you'd have brought this in an IPO, you'd have made 10 times your money. But obviously, if you've ever read the book One Up on Wall Street by Peter Lynch, he's a great investor. He says, just because you've missed the first 10 years of growth doesn't mean there's going to be no more growth of the company. If you'd have brought Walmart, this is from his book, 10 years after it IPO'd, you'd have made 10 times your money. You'd have missed the first 10 times. You would have already been a 10 bagger, but it still had another 10 times in it. So you haven't missed the boat with some companies sometimes just because they've grown exponentially in the first 10 years. Sometimes it's better to buy. I mean, if I'd have brought Facebook in 2012, I wouldn't have known whether it was going to be successful or not. I couldn't understand how it's going to make money, but now I understand how it makes money, how it's going to make money in the future. So it's pretty much more, I understand the company better now, and I'm sure it's still going to be a multi-bagger in the future. I'm sure on this. Obviously, I'd just like to say I'm not not a financial advisor, so please do your own research. But yeah, I'm bullish on Facebook, and I think it's a good value out of all the tech stocks at the moment. So yes, these are the two companies I'm using to build the core of my portfolio in my ISA, and then I'll just go into my general investment account. Because I mean, Facebook's a beast of a company, really. You just have to look at the numbers. So if I just go into my general investment account now, and then in this one, I'll just, it's, you know, Chinese stocks haven't done one in the last few months. I've sold Huya in about the $15.50 mark. It's currently down to like mid $14 range now. So I got that. I was bullish on it, and I still think it's good value. I still think it's a streaming platform for gaming in China. But it's had some negative news. Obviously, the Chinese government blocked the merger with Doju, which is another esports streaming platform, sort of similar company in China, and he's blocked that. So that news is, so that would have opened up a lot of value for shareholders in that. But I didn't have a massive position size anyway, and I thought Alibaba was, you know, is looking really cheap at the moment. It's one of the cheapest companies out there, I think, in terms of the size and its growth potential. For this company of its size, this is the company I've got. It's $211. My margin of safety price is around about the $200 mark. So it's looking, you know, 50% off fair value, or, you know, between 30 and 50% off fair value. As you can see there, I've sold Huya and brought a large chunk of Alibaba and more of it. My average buying price is like £159 a share now, which is you know, I think it's about 200 in this portfolio. It's about $220 a share, which I'm happy with. I'm £50 down, 6% down at the moment, but I'm not really looking at that. I'm looking at the future. You know, 26 PE ratio. You know, if this was an American company like Amazon or something, you'd be looking at a 50 to 60 PE ratio. So it's looking relatively cheap. Obviously, this is a beast of a company. Its revenue come out and it just beat expectations. It was a great earnings update a couple of weeks ago. But obviously, it had the fine from the Chinese government. It's put that in the operational costs rather than other expenses, and that's affected the earnings per share. EPS, so it's missed its EPS, which is a one-off thing. It's not going to be in the next, you know, 4 or 5 earnings updates. So I think a lot of investors have just seen it's missed the EPS. Its price has tanked a bit more. It's given a great buying opportunity. I mean, I'm not going all in on it. It's quite a big position in my other portfolio also, and I'm quite happy with my position size. But while these prices are the same, I'm going to be, you know, buying more at month after month. And that's the plan, is while the prices on Facebook, Tattoo Chef and Alibaba, which is a beast of a company also, are staying at these low prices, I'm going to be investing as much money as I can every month. I mean, I'm only limited to how much I can invest. I ain't going to be able to fill my ISA up this year, but yeah, I think for a value investor, Alibaba, Facebook are great, you know, growth companies offering great value at the moment below their intrinsic value, and there's plenty at the current time. I think all the companies have a 30% upside with current prices, not including, you know, the future possibilities and the future growth in these companies. So obviously I'll be doing an update on, you know, every couple of weeks to 4 weeks, because obviously I've got 38 subscribers now, so thank you everyone that's subscribed. But I'll be doing one every couple of weeks to 4 weeks, because I haven't got loads of stocks in there. It's quite a concentrated portfolio, and yeah, so I'll be showing you what's gone up, what's gone down, any news on the companies. So I hope you enjoyed this update, and I hope you follow me through my journey. Just all smash the like button, obviously, for the algorithm. Subscribe to the channel, and if you need to invest in, there's a link in the description. Please check it out and grab your free share by signing up to Freetrade. Hope you've enjoyed the video. Have a lovely day. Till next time, peace out.